there, everybody. My name is Allison Ostrander, and I'm the Director of Risk Tolerance here at Simpler Trading. And in today's video, I want to talk about a potential earnings trade on Meta. Now, earnings isn't until next week on the 31st after market close. So keep in mind, this is not a trade idea I would put on right now. This is a trade idea I would put on going into that announcement, aka on the 31st, that day of trading, going into the close that day before the earnings announcement happens after market close on July 31st is when I would implement this trade idea. And that would be based on where the underlying price is currently at. That's part of the reason I wouldn't put this on just yet. But because this is my time to do a video, I thought it would still be a good idea to walk through this trade idea now. And that way you can kind of take the education from it and then implement it based on where Meta is trading going into the news event itself. And so the first trade idea, there are two ways you can trade around earnings. You can trade off the possibility that it's a non-event and take the crush on premium as your trade idea to lock in a quick win. Normally, if that's a trade idea I'm considering, I would go with wherever the underlying price is currently trading at. So let's say this is where it's at on the 31st going into the close. You can see we're right by the 457.50 strike. And I would go out the anticipated range for the earnings announcement, that weekly expiration. So this is the week that the announcement happens. And as you can see, currently, the anticipated range is around $43 to $44. Now, this number may change by the 31st. So keep that in mind. You want to go based off what the anticipated range is. And for an iron fly to play off the theta decay way of doing this, you basically go out that point move. So we'll just call it 45 points to the upside. Oh, and we only have 2.5 strike increments go to 5. So we'll just want to keep that in mind for whenever we do both sides of this trade idea. Maybe we'll just go with 55 for a little bit easier math. So if we roughly go 45 points out of the money, we're basically at 410. If we go 45 points to the upside, then we're at 500. So the idea is you play on the crush and premium. As long as you stay within the anticipated range for the earnings announcement, you should be able to see the theta rip out of these strikes and allow for a quick win. Now, currently, this has a risk of about 13.54, a profit potential of 31.46, so not a bad risk versus reward. But if this is outside your risk tolerance, there are a couple things you could do. You could either narrow the iron fly, right? Bring it in a little bit so that you create a smaller risk, which also leads to a smaller profit potential, but still a nice risk versus reward setup. Or instead of doing an iron fly, you could bring your shorts to closer out of the money and do an iron condor. Now, this doesn't allow for as big of a profit potential. Let's push that back there. But the idea is you could still play the crush on premium and have a much better range for the underlying price to move. This allows for 227 profit to 72 risk, depending on the fill. And the idea is as long as the underlying price remains within the short strikes, once again, within that anticipated range, you'd lock in a profit. Now, that being said, the other way to trade this is based off the idea that you'll have a volatile move around earnings. And this is actually the way I would lean towards trading Meta, because Meta is one of those symbols that does more often than not have a volatile move. Last earnings, we had a volatile gap to the downside. Here we had a volatile gap to the upside. Here was a gap down, and there was a gap up, right? So usually it's a bit more of a mover around earnings. And so what I would look to do is I'd look to play something on both the call and put side, not knowing which direction we might move, but the idea that there will be a gap move of some sort. And a lot of times around earnings, when they do have a gap move, it's not uncommon for that gap to happen within the anticipated range, right? To that level, if you will. And so this is a strategy I teach in my compound butterfly class. And the idea is to put on 2 debit broken wing butterflies on each side, roughly the 45 points out of the money. So we'll start with 500 here. And we'll do a 10, 0.5 butterfly. Right now that's about $1.45 cost basis for the call side. And keep in mind, this is, you want to base these strikes based off what the anticipated range is on the 31st going into earnings, as well as where the underlying price is currently trading at. So if the underlying price is trading around this level and this is the anticipated range, this is what the strategy would look like with these strikes. So this is about a 145 risk, but keep in mind, we don't know which way Tesla is going to gap. So we need to do something also on the put side, a similar butterfly scenario. So we'll do this $5 spread, and it's about $1.41 cost basis. So in total, you're looking at about a 285 to 290 risk for both butterflies combined. And the idea is that if it moves right at that anticipated range, you're right around your pin strike on either side, which allows for a max profit potential of 860, or excuse me, not 863, of 715, right? It covers the risk on the butterfly that's further out of the money and locks in a profit. But let's say, because Meta is known to move quite a bit, right? Let's say it's greater than the anticipated move. And all of a sudden, let's say it's a gap to the downside and we're closer to 375 on the day of expiration. Well, that's the beauty about debit broken wing butterflies, is as long as you are mindful about the cost that you're paying, it has a forgiveness factor if it goes completely in the money, and it still allows for a profit compared to a standard butterfly, which would still lose if it was completely in the money on all strikes. So in this case, if you pay $285 for both butterflies combined, and then one side goes completely in the money, it still allows for a $215 profit potential. So once again, not a bad risk versus reward on that forgiveness factor, that if you're right about the volatile direction, but maybe wrong about the strike level because it exceeds it. So this is how I'd be looking to trade Meta through the earnings, due to the fact that it typically has gap moves. Now, just as a friendly reminder, I can't be the director of risk tolerance here at Simpler without mentioning it. Please understand that anything can happen around earnings. So it should really be a small portion of your normal risk tolerance that you're putting on for these trade ideas if you hold something short dated through an earnings announcement. And also understand you need to treat it a bit more like a lotto trade. And what I mean by that is you need to be 100% okay losing all of the capital risk on the trade. If you're not comfortable with that, then skip the earnings announcement, right? You can put on a different trade with a different setup. But for those of you who like to play earnings and enjoy putting on trade ideas around it, that is what I would lean towards with Meta, doing the more volatile trade idea. However, if you think Meta is going to be more like Netflix this earnings season and act as a non-event, I did also price out those Theta decay trade ideas to consider at the start of the video. As always, guys, may the trade be with you, my fellow Jedis, and I look forward to talking to you next time. Bye.
Hey, Allison Ostrander here, Director of Risk Tolerance at Simpler Trading. Thanks for watching the video. If you enjoyed this video, please be sure to like and comment down below to help us out. Also, be sure to subscribe and click the bell icon so you can get notified when we release our next video. And if you want to watch us trade in real time using our own money, go to simplertrading.com to learn how to sign up. As always, may the trade be with you, and we'll see you in the next video. Bye.